In recent conversations with investors, several of them have told me that now is the time to buy, that they're being very, very aggressive in going after deals that are coming on the market. Their approach to the market is to find a strategy. They have to have a strategy. What are they going to be able to do to really create value? Determine what your cap rate is going to be. Maybe it's a 5.5, maybe it's a 6. It's probably not going to be a 7 in today's market. You have to understand exactly where interest rates are, agency debt or bank debt. And you've got to keep in mind that you may have to underwrite negative leverage for a short period of time. These investors are being very aggressive because they feel that now is definitely the time to go into the market. There will be a limited number of transactions coming to market over the next several months. So once you've determined what your parameters are and what your investment strategy is, you're going to have to be very aggressive on any property that comes within that zone. The other aspect to keep in mind that's going to be critical in our industry moving forward is property management. Now, in the past several years, property management has not been as important just because we've had very strong rent growth and we've had appreciation. But as expenses have increased a little bit over the past couple of years, and moving forward, making sure that you have an efficient property management operation is going to be critical to maximizing values. Let me identify 3 main factors that I'm looking at that really explain why now is the right time to buy. The first part of it is that fundamentals remain strong. Occupancy remains very high, rent growth continues to be very strong, and we're dealing with a housing shortage in this country. The second factor to take a look at is new construction starts. So we know that there has been an unprecedented amount of new deliveries that have been coming to the market over the past couple of years. The interesting fact is that from fourth quarter 2022 through the third quarter of 2023, new multifamily starts have dropped by over 50%. So as we move forward, vacancy rates, which have increased a little bit because of the new units being delivered, and even could increase another percentage point or 2, but once that gets absorbed, there's not much coming behind it. So that pendulum is going to swing back, putting further upward pressure on rents. The third and most important factor is that there is an enormous amount of capital on the sidelines right now. And this capital is waiting for the right time to jump back into the marketplace. As Lloyd Blankfein, former chairman and CEO of Goldman Sachs, stated on a recent Marcus & Millichap IPA National webcast, if you're sitting by the phone waiting for it to ring so someone can tell you the market has hit bottom, it will never ring. My point is that now is a time to be preemptive. Now is the time to analyze the market, understand what exactly you want to go after, and then go after it very, very aggressively. There's a limited number of deals that are coming to market at this time, but that will likely change. The other part of it that's going to dramatically impact the lay of the land or the entire landscape is all of that capital on the sidelines. As that capital starts coming into the market, it's actually going to be more difficult for people to get deals done just because of the amount of competition that is going to be going after every single deal. And this is why the most experienced investors that I'm talking to today are aggressively pursuing transactions in today's market.